So, welcome to the Treasury Elite Leadership Series. I would like to thank all our viewers and members for supporting this noble cause of Treasury Elite, whose main objective is networking, knowledge sharing, and mentoring. Time and again, we bring in world class speakers and business leaders across the world in the field of treasury, global financial markets, and entrepreneurship, and conduct various programs, webinars, conferences in different format. Treasury Elite Leadership Series is one such format where we learn from industry thought leaders about their experiences of running their businesses, opportunities and challenges they encounter, and broad trends they see for the future. Good afternoon, everyone. I'm Abhishek Goenka, founder of IFA Global and Treasury Elite. We bring in world class FX and treasury practice and financial transformation for companies across India over the last 15 years. And today we have Mr. Nikhil Kamath, co founder and chief investment officer, True Beacon and Zerodha. Nikhil is an established leader in the financial services industry and brings with him a wealth of experience spanning over a decade. Nikhil founded Zerodha with his brother Nitin in the field in the year 2007. Today, Zerodha's disruptive pricing models and in-house technology has made them the biggest stock broker in the country in terms of active retail clients. Today, Zerodha's valuation has surpassed over $1 billion without any external support. They have been extremely innovative in their approach and now looking to boost financial literacy through their online initiatives like Varsity and Trading Q&A. They've also launched a fintech fund and incubator Rainmatter, investing in several fintech startups like Smallcase, Streak, Sensible, etc. Additionally, Nikhil has been operating a prop trading desk for the past 10 years, employing proprietary algorithm long and short derivative strategies for Zerodha's proprietary fund. Nikhil also co-founded True Beacon in 2019, an asset management company which aims to disrupt the market once again by adopting a zero-fee model and targeting the ultra high net worth families and institutional investors globally. Welcome, Nikhil. How are you doing today?
I'm good, Abhishek. Thank you so much for having me.
Glad to have you as a part of Treasury Elite Entrepreneur Series.
Mhm.
In the next 35 minutes, we will love to learn from your experiences. So, Nikhil, my first question to you is I think one common thread which I could link a lot of global entrepreneurs would be that they do not do this always for the money.
Mhm.
I would like to ask you a single biggest reason for you to get out of bed every morning
Mhm.
and get yourself to work. What is that drives you today?
So, Abhishek, I think at the very beginning, it's generally about the money. When you're starting off, I think when you've just started a company, the first thing you need is to break even, and everything is about how you break even very quickly and start making profits. Incrementally, it becomes less about the money. I think incrementally other drivers kind of control the narrative. I would say everything from watching a product scale to reaching a wider audience. These are the things which will motivate you further down the company's journey. But at the very beginning, I have to be like a little bit selfish here and say, yeah, it was about the
There's nothing to be selfish about it. I mean, initially, I think I was recently interviewing one of the gentlemen in Bangalore. He's a billionaire and he's one of the largest exporter in his segment.
money.
And he was very candid and said that yes, it is about the money. So there's nothing wrong about it.
Yeah. No, I think people do not like saying it out loud, so they make up other stuff to say instead. But I think along the way, it stops being about the money.
Correct.
That I will give you. I think once you have your needs and whatever your money ambitions are, once they are met and you're profitable as a company, I think you start thinking about things way beyond money and building stuff which is really cool.
Right, right. So I think you people have entered that stage now where
Yeah.
you started thinking about innovation and the new disruptive thing again in the industry.
Yeah, yeah. I think our focus is on that right now. Right now, the focus is not on money. Right now, the focus is essentially to pick inefficiencies that we have faced, be it with the purview of broking, asset management, things we felt were not right as an end user. We are trying to now change.
Excellent, excellent. So, Nikhil, how do you differentiate and keep a balance between entrepreneurship and professional management? What are the traits of people that you observe when you hire them? And this is the question for a lot of these family based entrepreneurs who are part of this forum. because they have this thing between entrepreneurship and professional management. There's always a conflict, and at the same time they make a lot of hiring mistakes also. And I'm including the very large organizations in that too.
Right. Yeah, sure. So let me again preface this by saying I do very little hiring, if any. I think we have a great team who kind of like does the hiring, and Nitin drives that process, or Kailash, who's our CTO, drives that process. But I think one common ethos everybody on the team shares when they're hiring is it's not so much about how a candidate looks on paper, but more about if he is a cultural fit to the organization. I think they spend less time figuring out what qualifications a candidate might have versus what projects the candidate might have done in his free time and stuff like that.
Sure, sure. So, Nikhil, as you talked about the culture, my next question
Mhm,
is about culture.
mhm, mhm.
Whenever I think about Zerodha, and I think
Right.
I started using Zerodha, I think 3 years back, and
Okay.
since then, a lot of my clients have been using Zerodha,
Hmm.
who are typically hedging in your platform, by the way.
Hmm. Hmm.
And we also run multiple accounts with you.
Right.
The things that has come into my mind when I think about Zerodha
Hmm.
is that number one was fast execution,
Right.
transparent dealings,
Right.
disruptive and a user friendly platform,
Right.
and an extremely innovative company.
Hmm.
Now, as someone said, that when you think about a brand, the first thing
Hmm.
that comes into a customer's mind is the brand. This is
Right.
what comes in my mind when I think about Zerodha.
Hmm.
You know, take us through your innovation culture
Right.
and your brand philosophy, and how do you ensure retention of clients and
Mhm.
delight?
Yeah, sure. So from the very beginning, I think transparency, as you mentioned, has been a very big part of our ethos. We were traders starting off, and we found the ecosystem of brokers back in the day very expensive, not innovative. But I think the biggest problem was they were not transparent, and you really never knew how much you would end up paying for a certain transaction up until you figure it out 1 month later when you sit down with all the reports and all of that. So transparency from the very beginning in terms of we're totally open, like if anybody asks us anything, we put it out there. I think that has been a big driving force as to why Zerodha has worked. In terms of technology and innovation, I think a lot of the credit actually goes to our CTO, who is Kailash. I think most of the innovation that you see has either originated from him or has been executed by him at some level. And I think he, as a leader, is really able to drive that vision of motivating and inspiring his team who keep coming up with new ideas and executing. I think credit goes there when it comes to innovation, especially on the tech front. But I think all of us, we always endeavor uh, to be the first change. You can't hold on to preconceived notions in your head very closely. You have to be willing to accept that there are smarter ideas, smarter people, better people to execute something than you might be yourself. And I think that going back to culture, which we were just talking about, is what allows for something like innovation to breed in Zerodha.
Excellent. Excellent. So, Nikhil, what are the major technological or structural changes are you seeing in the broking and the asset management industry globally? And
Right.
how is Indian companies adapting to that? And
Right.
what is one thing that you would think that Indian companies should adopt,
Mhm.
or people in your industry should adopt to
Yeah,
gear up for the in the next 5 years?
sure. So I think it's less a question of what a broker must adopt, but it is more a question of what the regulator needs to change to allow for brokers to innovate. Uh, we're not far behind the West, especially when it comes to broking, banking, fintech. In many cases, I would say India, if not at par, is ahead of the West in some cases. I think the red tape around the industry, the regulators have done a great job over the last few years, but a lot more could be done. And I think they would, going by the trajectory that they're taking right now. they would take those measures and make it really easy for fresh startups, companies, fintech players to start off without any kind of a hassle and hit the market very quickly. I think more
Sure.
number of people in this ecosystem will organically lead to innovation. And I think that's one of the things I look forward to in terms of, even if we are not at the forefront of that change, even to watch how the industry is changing would be very interesting.
Right, right. So, Nikhil, you have been an active trader and investor. And,
Yeah.
like I would use Ray Dalio as an example because I
Hmm.
strongly follow him. He
Yeah.
has a kind of an all asset, all weather portfolio, which comprises of commodities, debt, gold, equities, and he
Yeah.
invests in different proportion. And that strategy has been back tested and he claims has been fairly okay. If you want to advise a lazy guy and give him a broad strategy so that he can have a decent inflation adjusted return of
Right.
around 7-8%
Right.
post inflation
Right.
with a max drawdown of say 10-15%. Okay. And assuming that he's a lazy investor,
Hmm.
what would be a broad strategy that you're going to give him?
Yeah. Sure. So, Abhishek, one of the biggest issues in India is a typical middle class household. Like, normal people, we would typically always put most of our savings in real estate. I think you finish college at 23, you get your first job at 24. By the time you're 30, you have enough of a nest egg to pay that
EMI.
down payment towards buying an apartment, and then you're paying EMIs for the next 10 years or 20 years. It's a very illiquid asset class, and it's an asset class which is highly inflated in India. Uh, if you can rent the same apartment you're buying at 1.5% of its value, it kind of is a no-brainer that you shouldn't be buying the apartment, and it doesn't make sense as an asset class. The intrinsic structural problem is 70% of our money is already stuck there, and
Correct.
the balance 20-30% that you're left with, it becomes very hard to create a diversified balanced portfolio. I would say reduce real estate exposure from 70% to maybe 25-30%, or maybe even 35%. Get into large cap equity with another 35%. I would say you wouldn't do too badly if you pick a passive Nifty ETF, or you just buy the Nifty stocks. If you have sector wise picks, if you have 2 or 3 sectors you like, pick stocks in that sector, but from the Nifty maybe. Another 15%, I would say go for fixed income. I would again shy away from corporate debt in India, because the rating agencies, I don't believe, are at the level that they should be. And if when you buy a third party corporate debt fund, you don't know what underlying debt they hold, and it's very hard for someone to research and break that debt into small pieces. You can buy GSECs or tax free bonds, everything that carries a sovereign guarantee under your fixed income 15% bucket. And I would say another 10% you can put in gold. I'm a big fan of gold, and I tend to hold a significant amount of gold in my own portfolio. And the balance 5% you can keep for, like funky investment, something that catches your fancy and keeps you interested in the world of investing. I think that's a fairly liquid, balanced portfolio. I mean, Nifty has given 10-11% a year for the last decade or two. But with this combination, I think you should be able to achieve something that beats inflation, gives you 7-8%. But more than anything, I think it gives you the peace of mind knowing all your eggs are not in one basket. And it gives you a very liquid investment profile that in times of emergency, you can liquidate any of these without too much impact and use that money for what you need.
Sure, sure. That's a very right advice, and people who are listening to you today will understand. Of course, everybody talks about asset allocation and the importance of having limited real estate because real estate had a huge run
Yeah.
and people made tons, especially in places like Bombay, where I come from.
Hmm. Hmm.
But now, over the last 7, 8, 9 years, people have been not even been able to fight the regular inflation rates. In fact, the entire calculation is very much valid in places like Bangalore, Bombay. I'm sure it's
Hmm.
in Bangalore also.
Yeah.
So rightly said. My next question to you, Nikhil, is that you being a active trader in the past, I mean, trading is about a lot of things, catching your emotions,
Hmm.
risk management, money management.
Hmm.
position sizing,
Hmm.
leverage, what they call. You know, if out of your experiences, and I'll talk about the losses and not the profits, uh, which has been your one of the instance where you post after that a lot of instances you have come to a conclusion that okay, even though I make mistakes in these five six few things, there is one thing I
Hmm.
can never go wrong, and what is that? Or I should
Yeah.
not go wrong.
Okay. As a rule to myself, is it?
That's right. That's right.
I don't like leverage. I typically tend not to lever up. I think leverage is like, how do you put it? I think it's what causes most amount of losses in the market. People don't realize that it is very hard to retain your emotional sanity and act rationally if you have 10 times leverage on your portfolio. I don't think any human being can. The first thing I would advise people is stay away from leverage. I mean, I've burnt out many times in my own professional career, especially when I started off. I think when I started, I was about 17, and I'd have gone bust at least three times or four times, not sequentially, because the markets always make you think you can make money and then they make you lose money. Market has a emotional personality profile of its own. So leverage, definitely stay away from as far as possible. I mean, if you have a long portfolio, you're using leverage to add a certain amount of shorts and hedge that portfolio, sure, get leverage. But vanilla leverage, when you're long and you're buying more calls and more futures and stuff like that, is generally a bad idea. That's a big lesson. The second thing is being too stock specific. I mean, immaterial of how well you know a company and how much you have researched a company, uh, you still shouldn't be putting all of your money or a significant portion of your money into that one company, because there are so many factors at play that one cannot possibly have a system to predict or possibly rationalize, because India might go to war with China tomorrow, and there's no way in hell an infrastructure company investor kind of factored that in. So always have diversification, not just amongst asset classes but even amongst the companies that you hold. I think that's big lesson. That would be no leverage, ample diversification. Third point would be is don't follow tips and I'm from the industry and it sounds bad when I say this, but typically people who give you tips on penny stocks and small cap companies have ulterior motives of their own in mind. And I'm
Correct.
talking about people who message you blindly on your cell phone and stuff like that. You're best suited to avoid these companies and these tipsters. Put in your own research and then go and allocate money to that company. Yeah, I think these three lessons are very important lessons where many early first time investors falter. I think a lot of people go by, my friend said I should buy this at 50 and it will go to 100 in 3 months. I mean, if people were right with that much consistency, he wouldn't be your friend anymore. But I think it's best to avoid these things.
You so rightly said. I mean, time and again, when I talk to people who are in markets,
Yeah.
the first thing that they always mention, and that's been my personal experience also,
Mm.
means in 2005, I'd been trading a lot of FX and
Mm-hmm.
means huge quantities of FX. And the last, I still trade, but then in the last many years, even I learned one thing that no matter how wrong you go, but if your leverage is fairly okay, you will not screw up.
Yeah. 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 And you might as well go wrong on your own calls. At least then you learn something.
Correct, correct.
Yeah. Yeah.
You know,
Totally.
so Nikhil, please share one life changing experience personally and one life changing experience or difficult moment that you
Right.
encountered professionally. And how did you evolve post that? And how do you see it now?
Yeah. I mean, personal event I would talk about today, like how our life has become today. The pandemic feels like something we will be telling our grandkids about, like 40 years down the line or something. It has changed your perception of what life is, right? I don't think people are as concerned about money, wealth, all of these things, because life has become so uncertain in a way. I think personally, the lesson would be to have your priorities in order, not overtly focus on one thing. I get that success is important and building companies and work is important. I always found myself chasing that more than I should have when I've ignored other aspects of my life. And if I've learned anything personally, is, like, you don't know what will happen with life tomorrow. And to live a balanced, fulfilled life wherein you make time for your family, your hobbies, your be it whatever. I mean, every person has a different set of these things that they want to pay attention to. I think that's very important.
Right.
Professionally, I would say is the realization that sometimes what happens is when you try something and you become successful, it's very easy for you to start thinking that you're the smartest person around and hence you became successful. Most often, not the case. I think there are tens of thousands of people who are smarter, more hardworking. So much about professional success is a factor of where you are, what time, how lucky you are at that point of time. There's so many moving parts, right? So to acknowledge that and be like, okay, I have been lucky that I caught this bull cycle, or this, I was short in this bear cycle, or he started a broking business after the financial meltdown and nobody else was there for competition for a long time. I think is very important. I think to retain that humility of knowing that something has worked, not because of the fact that you are really good, but also because of the fact that market forces were in your favor, is very important professionally.
Right. Right. Glad to have you as a part of Treasury Elite Entrepreneur Series.
Thank you so much for having me.
Thank you so much.
Thank you.
Pleasure.